watching us here on Halftime Report. We're talking about the commodities arena. Manisha has joined us in the studio as well. And joining us is Suvankar Sen, who is the MD and CEO of Senco Gold and Diamonds. While we'll be talking about gold prices and demand, etc., I was interested, Suvankar, largely because recently there was a note that came in from the brokerage Motilal Oswal, which said that, the jewelry market will see a lot more formalization. They've initiated coverage on Senco Gold as well. Just wanted to know what kind of growth opportunity do you foresee in the next year or so with the kind of store openings that you have? And are you looking at opening franchise stores as well?
So see, if you look at our last year's performance, you will see that, we've grown by almost 29%, and the profit has grown by about 14 to 15%. So in terms of the coming year and the year ahead, we are looking at a growth of anywhere between 18 to 20%. That's the endeavor that we are all going to make in terms of the top line growth, as well as with the drive that we will all be taking to increase our, diamond jewelry sales and the other initiatives in terms of opening new stores, new franchisees. So we are all expecting that we will have about 18 to 20 new stores, about 10 to 12 company-owned, company-operated, about 8 to 10 franchisees. So it is with that plan in mind that we're all moving forward. And, the last 2-3 years, the growth that we all have seen, and in terms of the acquisition of new customers, the old gold that is coming into our, for customers are coming to exchange, which is mostly the non-Senco old gold coming to us, which is just showing that there is this shift happening from the unorganized to organized sector. So this is what has been the trend based on which, we are all being very optimistic. This quarter of April, May, June, if you really look at it, this quarter has been a quarter of kind of, more of planning, because at one end we had the elections, we had the heat waves going through the various markets, which was a detrimental factor to the retail sector, as well as the gold price that kind of really shot up in the month of April and May, for which we are seeing that this quarter might not be the best quarter to judge what we are going to see in the coming year, because the wedding seasons also is all, for Q3 mostly. Q2 would have a few, in the second half, it's Q3 and Q4. So we are all expecting now that the prices have more or less stabilized. We are, we've kind of gone over the uncertainties of elections, and the prices are now something that consumers are all willing to accept mentally. So the buying will start happening in a proper way in Q2. Yeah. So this is how we are looking at an optimistic future.
I also wanted to understand on what kind of or what quantity of non-Senco old gold seems to be coming to you, because we've seen those scrap numbers for sure increase, but is there an average number that you have at hand?
Yes, we've seen that about 60 to 70% of the gold that is coming for exchange is about the non-Senco gold. And also, Manisha, the exchange gold itself, because of the prices that have gone up so much, so around 2-3 years back, it was 22% of the total sales that was the old gold coming in. But now we are seeing that it is touching about 30%. So in terms of the transactions of business that is happening because of the old gold exchange is almost gone up by 25-30% in the last 2 years. So that's the, because people also have lesser money in their hands. We all have to accept that, the prices have gone up by 15-20%. So how are they going to kind of sustain and keep on buying? I think that old gold is helping in terms of not only recycling, but also in terms of business.
Oh, yes, and we have seen prices hit all-time highs, so I'm assuming that cashing in actually was profitable for many of those. Suvankar, also, as you said, the previous quarter, or the current quarter for that matter, has been all about planning. Motilal Oswal initiation and sense of coverage has been positive. We've seen SAIF partners also sell stake. How are you basically talking to your partners, to your promoters at this point in time? Are there any changes on that you would want to share?
No, there is no, in terms of talking to partners and promoters, we have to understand that the country is in a 10-15-year growth journey. So these are just like, certain situations in terms of having a base and then growing on top of that base. So I think this April, May, June has been one in which you're setting the plan for the coming year, and not just 1 year, but the coming 4-5 years. We have our multiple formats of stores. We've launched our Cines lab-grown diamond a brand. We have doing Everlight, which is a daily wear business. So we have seen that the average ticket size, because of the prices of gold going up, has moved up from around 60,000 to close to 70,000. So there are these good signs that are happening. But yes, just looking at Q1, if you look at it, we are looking at footfalls that have gone down because of having less of wedding season or the gold prices being high. But that's about it. That is what.
Okay. I also want to talk about Dubai, because that is where you forayed now. What is the progress there? Are any numbers that have started coming out of that as well? And are you looking at more other countries too?
So as of now, it's just been one store that we've opened in Dubai, and the plan is that we will be trying to reach out not only to the Indian diaspora, the subcontinental diaspora, but also taking the Calcutta handcrafted jewelry to various other countries that have always been appreciating and buying handmade jewelry of India, and especially made by the Calcutta Karigar. So that's how we are looking at it, to promote handcrafted, because with the prices going up, we have to look at expanding our markets and protecting and preserving our our art and craft of the country. So that is with which we are planning. So the numbers are still to come out, something that we can talk about, but it's a good initiative and a good effort from our end, and to get the international customers will be the success.
Oh, well, absolutely. And congratulations on that. And as you said, we're looking at more countries and more foraying out here. But Suvankar, also, what really caught my eye onto the last comment was the lab-grown diamond. And you have positioned yourself into this space as well. One, what is the kind of market that you see for LGDs? And how are the natural diamond penetration within India also doing, if you could share those numbers?
So see, natural diamond prices that we have seen, especially for the bigger size diamonds in the last, I would say 2-3 months or 4 months or so, have been under pressure. It could be because of the slowdown that we have seen across the world. It could be that there has been gradual more awareness of the lab-grown diamond, while the lab-grown diamond prices itself has also been under pressure. Because of the productions that have happened and the demand that is not happening to the extent that the productions have happened. But I guess that these are all short-term situations. What we as a jewelry organization and the sector needs to do is build on the trust factor, build on the awareness factor amongst consumers. Because while there will be a market for the real diamonds, and last financial year our diamond jewelry sales have gone up by almost 25-30%, and the stud ratio went up from 10% of the total sales to 11% of the total sales. So the trend for the last 2-3 years have been on a growth. But yes, this quarter again, I think it's all linked to your the consumer sentiments and the liquidity in the market, the wedding dates that are there. So this quarter, we have all seen a muted kind of a demand across. But then again, that doesn't stop from the future plan. Yes.
What is the plan going forward on lab-grown diamonds from here? You've launched a brand here, a new identity. Is it going to be shop-in-shops? Are you promoting it in some sense? And would you say that natural and lab-grown perhaps would run parallel, have a market of its own?
Yes, it will run parallelly. See, the diamond jewelry sector is about 15 to 20% of the overall jewelry sector. And with the gold prices going up and the young generation's demand and the trend that we see, that 14 karat and 18 karat jewelry is what will be on a growth and upward trajectory. So I think diamonds or anything which will be leading to stones that we add to the gold, 14 karat or 18 karat, will have a more positive and optimistic growth trend compared to the normal plain gold jewelry. So, there will be a segment of natural diamond buyers when it comes to certain sleek designs or a special occasion of wedding where you would want to buy, natural diamond to make it memorable. But for fashion and for, multiple options of jewelry to go with your clothes and to get various shapes of diamond, I think that lab-grown diamond will play for the bigger size diamonds. So that will fulfill the aspiration of many of the middle class, upper middle class Indians.
We're all waiting for appraisals, right?
We're all waiting for appraisals. I'm not sure though, with those appraisals we'll buy lab-grown diamonds or natural diamonds or nothing actually.
But Suvankar has an option for all of us there.
But Suvankar, just one question before we let you go. I remember during the IPO you said that you will stick to your core market of West Bengal, East India, market that you understand, customers that you understand. But now we see some stores outside of West Bengal as well. I see a couple in Mumbai. Now, Manisha, just told us that there's one in Dubai, etc. as well. So, are you looking to diversify from your core market? That's one. And as you do that, could there be a risk of making charges coming down on gold jewelry?
No. So while the focus will remain on East India, North India, and that's what we've been telling. So suppose if we plan to open 20 stores, we will ensure that 14 to 15 stores are going to be on eastern or northern part of the country, which is our core. So east, not only Bengal, it could be Bihar, Orissa, Assam, Jharkhand, all the eastern India states, that will be 50 to 60% of our new stores. Delhi, NCR, UP, Punjab, MP, that will be around 20% of our new stores. And the remaining 20% will be these, Western India, Southern India, or outside India, as we say. So there will be an 80-20 ratio with which we will continue to open to hedge all our risk and ensure that we focus on our core, but we also sow the seeds for the future as well. So that's how we will want. And yes, as you said on the making charge part, it is not only about east, north, south, or west, or anywhere, but making charges are something with the increase in gold price. Offers, discounts have become a part of the whole process of attracting consumers. So even if we look at it, in the jewelry industry, there has been a downward pressure on the margins. So it is because of the gold price that has gone up, and you need to make sure that the consumers are interested in buying in spite of the high gold price. That's how it is.
All right, Suvankar, always a pleasure speaking. Thanks, Manisha, for the conversation as well. We don't know about our appraisals, etc., but his shareholders definitely can afford a few more diamonds. Just as he was speaking, you pull up the intraday chart of Senco Gold. The stock has been a big mover already. And currently, just as he was talking about, the second quarter onwards, business looking good, and the lab-grown diamonds business that he's talking about, we've seen a bit of a spike in the stock price as well. So the intraday chart comes up for you. There you have it, up around 5% as we speak.
Must appreciate you for the timely reminder as well for the appraisals.
All right, take a short break, come back, and on the other side, we'll get you more on the stock markets and a lot of stock-specific action.